Afternoon, everyone. Apologies for earlier when the webinar original recording went out without any audio. So I'm going to re-record the slides now. Hopefully I can remember everything that I said. So we'll go through the pack again, and then you can, obviously you've got copies of the slides already as well. So you can align everything that I was lip syncing to with what I'm going to say now. Cool, excellent. Nice. So let me kick off. So this is the Pearson Ham quarterly pet insurance webinar. So we're going to be looking at trends in the market from the last quarter and of course full year 2025 as well. So let me begin just by giving you a bit of background on Pearson Ham. Apologies if you're a regular to the webinar and you've seen these slides before. For a bit of background, so Pearson Ham's data comes from a pricing point of view. We are pricing specialists. Our data is acquired. We run genuine customer profiles through comparison sites for insurance quotes. By cycling real consumer details through those journeys, we're able to capture pricing detail from all the insurers on the comparison site panel. And then as we are pricing specialists, we've gotten pretty good at identifying what is a genuine pricing trend and what are outliers in the market. So our data comes from the comparison sites. We apply our own in-house business rules, data cleansing. We have our own methodology as well for rotating risks as well. So you get like-for-like clean comparisons of an equally weighted market representative mix of profiles that we run. And then from that pricing data, we're able to produce some of the key metrics you're going to see as we go through this pack. So things like pricing, price change, top price change, market share, quotability, and so on. So if your clients have asked, you'll have a bit more access to some of those metrics. If not, feel free to reach out to us and we can give you a demo of some of the market insights we can provide. But what we're going to go into today is a fairly high level view of what we've seen in the pet insurance market over the last quarter. Pet is just one of several insurance industries that we do track. So we've got car and home insurance. That is a separate webinar hosted by Stephen Kennedy. And then Sam Pombolis, who does a van insurance webinar, sort of alternating quarters as well. So his is in next month. That's on the start of March, if there's any interest to join that too. And then just to sum up our tracking, really, our ethos is the profiles that we run. So they're always real people. So if there's any kind of enrichment that comes with quote information, we always use real people, so they should pass any kind of soft credit check. So it means that the data we're getting is for genuine people. There won't be any sort of fraud rules that might have skewed the insights that you're seeing. And we always web scrape with consent, so we don't collect data from sites that don't want us to. Lovely. So quick look back at the last quarter then. So for those of you who joined us actually for the previous webinar, you'll see a bit of an invert on trends here. So we've had decreases month on month for the last 3 months. That puts Q4 down by 2.3%. For the top 5 average prices. This lifetime cover. This is top prices from 1K cover. And you can see here how that fits in with the rest of the year as well. So we've almost been perfectly alternating every quarter between positive and negative. But you can see there's a bit more of a weighting to those negative quarters, which means that the index is down by about 1.5 percentage points since the start of the year. So sort of while increases in Q1 and Q3 have been cancelled out by decreases in Q2 and Q4. So that is cover from 1K, top 5 average prices. That's this line here in blue. You can see though that if you're looking at top 5 average prices at higher cover levels, so if customers are applying filters to the sort of the minimum level of vet cover that they need for a policy, you can see there's been a bit more variation there. In fact, sort of the higher cover levels, we're seeing more of a deflationary effect to the point where sort of the top 5 prices for 5K cover or more have actually decreased by about 11%. Year on year compared to the 1.5% for 1K cover. So that just speaks more to, I think, competitive activity from different providers than anything else. We've seen a lot of new products entering the market during 2025. And so with every new sort of row appearing on a page, you're going to get more and more saturation. It's going to be reducing the top 5 average that customers are seeing when they go to a results page. But it's interesting, if you look at the trend for 2025, 1K cover, fairly small change, more of a decrease as you start going up the cover levels. If you go back a little further, so we've been tracking pet insurance prices for a bit over 3 years now. You can see that those lines are a bit inverted. You've got 5K cover on the top there instead. So you can see sort of back in 2023 when there was a lot of rate going into the market, that a lot more of that went into 5K cover than it did for 1 and 2. So despite the sort of the stronger downward trend that you see for 5K cover during the year, it's still up on a 3-year index. So over the last 3 years, since the start of 2023, top 5 prices for 1K up by about 9%. 5K cover, that's closer to 12%. And then if we divide that up, look at slightly different cover levels as well. So max benefit has been following fairly close to lifetime over the course of the year. Similar level of sort of decrease we see there. Time limited has got a bit more of a downward trend on it. Just about over 6% decrease from time limited top prices. Again, I wonder if we're seeing a bit more competitive activity. We're seeing insurers taking a bit more notice of time limited cover. So again, we're seeing maybe some more products being launched into that market, and that's pushed the top 5 average prices down as well. Excellent. And then throwing a bit of segmentation in there. So like I say, it's a general negative trend throughout the year. It depends really, though, who you are and what it is you're insuring as to how you've seen prices change over the years. So actually, if we throw age group into there, you can see there's a bit of variation. I always think when it comes to age group, it's almost a proxy for certain insurers. There are certain brands who do their most competitive pricing for, say, older animals or younger animals, and they sort of hive off different segments of the market that way, which I think is maybe what's driving a bit of a differentiation here in the insurers that are most competitive for over sixes. Maybe not doing so much with their pricing, whereas I can think of one insurer in particular who is frequently in the top 6 for animals in this age bracket between ages 4 and 6, who have been quite competitive during the year. So that might be what's driving the difference there. And then throwing in actually just between cats and dogs, you've got quite a wide variation here. So actually premiums for cats are up slightly year on year. All of the deflation has really come from premiums for dogs. Those are down by 3% since the start of the year. And then also by animal breed as well. So down the bottom there again, 3% decrease if you've got a Moggy or a mongrel dog. But actually, there's a small amount of increase coming in for crossbreed animals. So we've had a bit of interest in that actually, sort of from contacts that have reached out to do with sort of the risk modeling for different breeds. And I'm wondering if particularly for crossbreed animals, whether we're not seeing insurers maybe adjusting their perception of risk for certain crossbreeds, which has led to prices remaining relatively stagnant, whereas things like Moggies and mongrels are a much more of a known quantity, I suppose, in terms of risk. And then looking at region as well, this is often related to the localized cost of vet care too. So you can see there is a bit of differentiation over the course of the year. Prices in London are largely flat versus the start of the year. The largest rate of decrease has been in Yorkshire, so they're down by roughly 3%. And of course, there's a sort of there are differences in footprint. I can think of one leading insurer who's got more of a limited footprint for profiles in London. So if you've got certain insurers that don't quote for certain regions as well, that will also be impacting your top 5 averages as there's less choice for consumers. Lovely. So taking a look at those top brands that we can see. So we've anonymized it here for the webinar. If you join us as the client, you can see who's behind those insurer names. But for now, we'll just use some pseudonyms. So we've got everyone in order here, insurers 1 through 15, based on their market share, so how often they appear in the top 6 ranks of results pages we're collecting, and then that is sort of comparing it to the start of the year as well. So if you're looking at cover from 1K, you've got quite a lot of market share split between these top 2 insurers here. You probably have a fairly educated guess who those two are, but they're appearing in the top 6 ranks for about 3/4 to 4 out of 5 results pages that we're collecting for lifetime cover um, from 1K. So those ranks haven't changed. They've been at the top of that leaderboard since the start of the year. I would point out, and those of you who've come to previous webinars, that share of ranks is lower than it has been. So they are still the top, but they are losing out. And you can see maybe where some of that market share is being passed across to. There's a few here who've got a year-to-date rank change of 7, 8, 9, 27 ranks versus where they were in January. So you can see as well, driving that increase in market share, some really big price decreases from a small number of insurers, double digits. There's at least 2 there decreasing by more than 25%. So that'll be what's maybe spreading things out, while we're seeing quite a large amount of year-to-date change in market share during on 1K cover. So if we split the market up, so that's the lowest level. If we start applying filters, we've got a minimum cover level. If we go up to 2K, we see a lot more year-to-date rank change. In fact, no one, apart from Insurer 24, is in the same place that they were back in January. So we're seeing this a lot in the middle ground. So sort of while 1K, relatively similar brands that are leading there. Once you start getting to the middle, we've seen a lot more activity, a lot of new products hitting the market in 2025, as insurers are putting out products to cover pretty much every single cover level. If they had a 1, a 3, and a 7, they'll have put a 2 and a 4 and a 4.5 and a 5 and a 6 to cover every single base. And I think that's one of the reasons why we're seeing a lot of these insurers previously weren't competitive for something like 2 or 3K. Suddenly have a greater chance of being somewhere in the top 6 as they increase the spread of their offerings. So again, you can see Insurer 1 actually was the most competitive for 2K cover at the start of the year. They've just lost out to Insurer 5 with that 27% decrease. Insurer 9 has moved into that space as well. Again, huge decreases, and they've picked up 9 ranks. So again, back in January, if they're in 4th now, they would have been in 13th back in January. So big shift in market share for 2K, same for 3K here as well. You've got a few here. You can see year-to-date rank change, big numbers. Essentially, they were never in the top 6 back in January. So all that they've gained between them, nearly 50% of that share, has just been picked up from 0 since the start of the year. And again, you've got big price decreases from them there too. It's a similar story for 4. So Insurer 5 is back here as well. So you can tell where maybe different insurers have different price points. So if Insurer 1 does a bit better for 3, I think Insurer 5 has a very competitive 4K product. So that's very frequently appearing in the top 6, while Insurer 1 is less likely to appear in the same space. But again, lots of rank movement here, lots of shifting around just in the last year, as we've seen sort of the market moving. And as you get back to 5K, it settles down a bit. So it's really that bracket between 1 and 5, where a lot of the competitive activity has been 5 plus, less so. You've got a lot of zeros there, a lot of insurers staying in roughly the same relative position as they have been all year. There's a few moving up into that space, but you're still quite consistently Insurer 1 and 2 as the largest market share. So it'll be one to keep an eye on whether we see that continuing into 2026. I know sort of we've been observing just over the course of the year, just the length of a pet results page just getting longer and longer, as we see maybe 3, 4 different providers put out new cover levels every single month. So sort of on one side, it means that prices are falling for consumers. They've got a lot more choice at the top of screen to pick from to get themselves the right level of cover, but it also means that there's a potential risk of too much choice. Are they seeing the same insurer's logo 7, 8, 9 times with different variations on cover and excess? So it's about sort of where are we going with the rate of competition and product rollout, and what does that, is that going to pay off for customers? or whether eventually it's going to lead to more complication and maybe sort of underinsurance, as if there's a risk of buying products that aren't suitable. So that's just something to, I suppose, keep an eye on, future webinars. Lovely. And then just to finish off with a bit of market news. So this one is put together from figures from the ONS. So this is their vet care price index. That goes back to 2015, that data. So we've indexed it here against our own market top price index from 2023 that you saw earlier. So it's with this view in mind that you can see the difference between the orange line, which is essentially claims costs from the ONS, versus how we're seeing pricing moving for pet insurance. So the income that insurers are going to be getting from premiums. So while there was a period back in 2023 where there was quite a strong upward trend where pet premiums had a higher rate of inflation than cost inflation in vet care. Since then, though, premiums have pretty much stagnated. We're at a roughly similar price level at the end of 2025 than we were at the start of 2024. Meanwhile, vet care has seen a pretty constant rate of inflation to about 37% over the same time period, and that's been quite constant as well. So it's not like we've seen sort of maybe a more recent downturn, anything from the CMA investigation. It doesn't seem to have knocked that upward trend that we're seeing for vet care. So it just goes to show just how wide that gap is going to be becoming for some insurers that may be starting to get aware of just how much of a difference there is between the income they're getting from premiums and what they're having to pay out for claims. But maybe one way around that, we've got sort of reports from many pets who are now making more use of AI for claims management. So now every claim that goes into many pets is going through an AI agent that's able to read invoices. It can request medical records. It can flag duplicates, pre-existing conditions, fraud. And it means that many pets are able to essentially push through more than half of claims without any sort of human interaction at all. So it's maybe moves like that if we're seeing these trends, or on the previous slide where there's so much competition in the market that it's difficult to increase premiums and yet costs of claims are going up. That maybe that space in between, there's room for these sorts of solutions, perhaps to keep costs down at insurers, to eliminate sort of losses to fraud from claims, that might help to narrow that gap for insurers. And that brings us to the end of the webinar. So once again, apologies for earlier with no audio. I think I've hit every point that I touched on earlier in the day. If there are any questions that you wanted to ask, anything that you'd like some more detail on from this call, or anything that you wanted to ask about that I didn't cover in this call, do feel free to ping me back. If you signed up to the webinar, you should have an email from me, so you can reply to that email, and I'll get back to you. But if not, I will leave it there, and I will see you in the next quarter for the next pet webinar.